I think the fact that we're putting these tariffs in place fragilizes the US dollar's role as the only reserve currency of the world and opens up nations to consider alternatives. So far, you've seen countries moving aggressively into gold, but I think they're also moving and thinking about moving into Bitcoin. In other words, the tariff sort of opens a seat at the table for which Bitcoin, I think, will get a sliver of interest from governments, and that will be accretive to the price.
All right, here we are with Matt Hougan. Matt, it's so great to have you back on the Defiant podcast. Welcome.
Thanks for having me. I'm excited to be here.
So Matt is CIO of Bitwise. Bitwise is one of the Bitcoin ETF issuers and ETH ETF issuers, and they've been a major player in crypto for many years with funds and indices and just like connecting the way traditional investors are used to investing with the digital assets space. And Matt's really has a really kind of clear view of macro and how those themes impact crypto. So that's why I invited him on the podcast this week to make sense of, all of the latest shifts that are happening and what to expect going forward. So Matt, would just love to start with, I think one of the biggest drivers for crypto prices and flows, which is rates in the US. And that kind of just sets the price of money globally. So it always, just has a major impact on crypto. And so this year, I think, coming into 2025, everyone was expected to have a really kind of straightforward bull run for crypto. Like everyone was expecting lower rates, a friendly regulatory environment, just lots of liquidity flowing. It seemed like all the pieces were lining up for a crazy bull run, but that hasn't really turned out to be the case. And now rates are expected to be higher for longer. So how does this impact crypto?
Yeah, absolutely. Yeah, you're absolutely right that we started the year thinking it would be pure macro tailwinds. And instead, what we have is this weird combination of forces pulling on either side of the ledger, right? So we do have increases in global liquidity. We do have a weaker dollar. I know we're going to talk about that. But we have disappointment on the rate side, right? Rates are higher than we expected. The number of rate cuts that the market predicts has gone down over time. The Fed is making very hawkish statements about favoring controlling inflation over its dual mandate of complete employment. So they're clearly biased against allowing inflation to creep up at all. And they feel maybe pinched with what's going on from the tariff perspective, which is supposed to be a price shock into the economy that could boost inflation, which means we get higher rates even if we get economic weakness. And I think that is a negative pressure on crypto. It's not the dominant force driving crypto prices, but it is keeping the bull market that many, including me, expected from materializing early in the year. It's sort of tamping that down. We haven't been able to escape above the $100,000 level. And I think the higher for longer rate environment is one of a handful of factors that are keeping us below that point.
Interesting. Okay, you mentioned tariffs, and that's definitely the other big point that I wanted to talk about, because I think this has been maybe the biggest surprise out of Trump's presidency. Definitely surprised me. I did not expect him and his administration to be so aggressive towards going into this tariff war and just doubling down with major trade partners like China. And like you said, that is adding a lot of volatility and uncertainty to the market. Will this just increase prices across the board? What will happen with rates? So yeah, you talked about kind of what higher rates do to crypto. So how do tariffs play into all of this too?
Yeah, absolutely. Short term, it's clearly a negative for the market. And I don't just mean that from the market's reaction. Obviously, the market reacted negatively to Liberation Day. It's been a challenging environment for all crypto assets, particularly if you look at the different return between Bitcoin, which has really held its own relative to other assets post Liberation Day, versus other crypto assets, which are riskier assets, which have just gotten crushed. So clearly, the impact of tariffs has been to crush risky investments of all sorts, including the long tail of crypto assets, high beta tech stocks, and other things have all been crushed. I think the reason for that is twofold. One, tariffs have just introduced a huge amount of uncertainty into the market. Tariffs were on and then off. They were everyone, and then they were really just China, and then they were even more on China. We don't know when trade deals are coming. Markets hate uncertainty, particularly for risk assets, and we've seen that effect. Now, again, it is interesting that Bitcoin has held its own. I think that points to Bitcoin becoming a risk off asset. I think it's in that transition, but other crypto assets have just been crushed. I also think long term, the clear thing from this tariff war is that it's going to be an economic cost. We're making a political intentional decision to favor U.S. manufacturing and to grow jobs in a certain part of the economy. That may be the right thing to do for the country. That part of the economy really has suffered. The people in those jobs have suffered. The industries have suffered. We're making a decision to boost that area, but there's a cost to that. And the cost, I think, will come in the form of higher prices and maybe for a period of time, slower economic growth. And those things tend to be bad for the market as well. So I do think net, the tariffs have been negative for crypto. Long term, projecting out a year plus, I actually think they'll end up being positive. They shake up the monetary order, they make room for Bitcoin. I think it's actually a catalyst for Bitcoin long term, but short term, it's too much uncertainty for the market to handle.
Can you expand on why you think it would be positive for Bitcoin in the long term?
Yeah, if you think about what Bitcoin's trying to do, it's trying to be a globally important macro asset. If it becomes a globally important macro asset, it's probably going to be a $5 to $20 trillion asset, right? It's sub $2 trillion now. If it has a seat at the table, you're talking about a $5 to $20 trillion market. I think the fact that we're putting these tariffs in place fragilizes the US dollar's role as the only reserve currency of the world and opens up nations to consider alternatives. So far, you've seen countries moving aggressively into gold, but I think they're also moving and thinking about moving into Bitcoin. In other words, the tariff sort of opens a seat at the table for which Bitcoin, I think, will get a sliver of interest from governments, and that will be accretive to the price. That's why I think long term it will be positive. Short term, all that's overwhelmed by the amount of uncertainty that it injects into the market. But long term, is it more likely that Bitcoin is a reserve asset of multiple countries today than it was 45 days ago? Absolutely, significantly more likely. And that's to the long term benefit of Bitcoin holders.
That's so interesting. So it's like the US closing itself up and becoming weaker as with the dollar becoming weaker as a global reserve asset kind of leaves a vacuum that some other asset and currency will have to fill. And so that leaves more space for Bitcoin to potentially be that asset.
Or multiple currencies, which is
Mm.
actually what I think will happen. I just think we're going to move from a world where really the dollar is it to a world where countries increasingly have multiple types of reserve, multiple assets are used for international transactions. And I think Bitcoin will have a seat at that table, right? The status quo made it hard for Bitcoin to edge its way in, but we've shaken up the status quo. And I think that's opened a window of opportunity for Bitcoin. For what it's worth, this is why I think the US Strategic Bitcoin Reserve is so important, because it pushes the world toward a place where Bitcoin has a seat at the table and where it's maybe Bitcoin and not the Chinese yuan or not the euro or not another country's asset that fills some of this secondary reserve role. So I do think it's a long-term positive for the space.
That's so interesting. But it would be a long-term positive mostly for Bitcoin, right? Or do you think like it would have like spillover effects for the rest of crypto?
No, mostly for Bitcoin. That's a
Mm,
Bitcoin specific story. And I think
mm.
that's another one of the reasons why we've seen such a divergence in returns between Bitcoin and other assets since Liberation Day. I know we've seen some recovery in ETH, and as this sort of bounce happens, we've seen those risk assets recover. But the uncertainty and the slower economic growth and the increased sort of economic volatility is broadly negative for non-Bitcoin crypto assets right now. It creates more of a headwind than a tailwind.
And so related to the U.S. losing its supremacy, we've maybe seen investors think that this is already starting to be the case with the dollar weakening all this year. And traditionally, Bitcoin has been super, like, really correlated with the dollar. How have you seen that kind of start to decouple, and why that would that happen?
No, the dollar has been very weak. The Dixie is down below 100 for the first time in a long time. And that's coincided with a period where Bitcoin has outperformed the equity market and acted as a hedge asset. I continue to think a weaker dollar is positive for Bitcoin. I think that will play out over the rest of the year. And I think the Trump administration wants a weaker dollar. So I think this is a trend that's in place and likely to accelerate. If anything, it's accelerated even over the past weekend. So, net, I think that is a positive catalyst. The reality is, as I look out 12 months, I still see these massive positive catalysts, particularly for Bitcoin. I think the argument for other assets is more complex and contingent on a number of developments. But I think for Bitcoin, all of these things are playing into its, outperforming, decoupling from equities over the next 6 to 12 months. That's what I expect to see happen.
Yeah, it's been interesting to see Bitcoin decouple from equities, because usually Bitcoin has been really correlated to equities. It's acted as another risk asset. But now that there are these just major structural shifts underway, it seems like Bitcoin is starting to prove that it really is digital gold and is actually a hedge, against all this volatility. And like I had been just skeptical that this would be the case when this happens, because to me, investors would just see crypto as like all the same thing, as like, okay, crypto is risky, and they would just like throw it in with equities, and Bitcoin would just continue to perform really like another stock. But it's really kind of playing out differently. Bitcoin is really showing that it trades like more of a safe haven.
That's exactly right. Well, it's important to know, this is actually the first major macro pullback, if you look at Bitcoin's history, where it has showed this decoupling, right? It didn't do this in 2018 when we had our last trade war with China. Bitcoin fell more than the S&P 500. It fell more during the taper tantrum. It fell more during other macro shocks. This is the first one. But I think it's important to note that this is not yesterday's Bitcoin, right? This is the first macro shock where we've had an ETF that lets traditional investors access the space. It's the first macro shock where we had a large regulated derivatives market that made it really a tool for the largest hedge funds to play changes in the environment. It's the first macro shock where we had BlackRock with $50+ billion of Bitcoin, right? This is Bitcoin's debut as a tool that traditional macro traders can use to react to macro shocks. And what we've seen is the way they use it is, as you said, as a form of digital gold. I think that's the direction of travel. I don't think we're going back. I think it's only going to strengthen in terms of its hedge characteristics going forward. If you abstract away sort of all the past and you think about what really drives the price of Bitcoin, it's just fundamentally different than what drives the price of stocks. I think it was historically correlated because it was young and emerging and risky, and it's now a real institutional asset used by real institutional investors as digital gold. I think it's made that sort of leap into the big leagues.
The PR Genius is a top crypto PR and growth marketing agency, helping brands globally with expert PR and strategic growth marketing. They've worked with 300+ projects like Movement Labs and IO.net. Unlike traditional agencies, they charge only on performance. Their services include earned PR opportunities and marketing services to help boost wallet holders and organic X followers. Learn more at www.theprgenius.com.
It's so interesting. So do you think what's driving Bitcoin's outperformance in this cycle is actually flows from traditional investors buying Bitcoin as a safe haven?
Yeah, absolutely. We see big flows from three areas. We see big flows from companies buying Bitcoin, right? Companies have bought more Bitcoin this year than all the new Bitcoin that's been produced, something like 2 or 3x. So they are a big source of demand.
So like MicroStrategy mostly, right?
MicroStrategy, but they're 80 plus companies, and that number is growing. So that's a secular trend that I think is strong. And those are companies that are worried about the dollar and debasement and want a different exposure. At Bitwise, the audience we serve, which is financial advisors and family offices, that is in a rip roaring bull market for Bitcoin. If you look at the number of institutional investors reporting Bitcoin ETF holdings and 13F filings, that's gone up every quarter since the ETFs launched in January 2024 at an accelerating rate. I expect the Q1 numbers, which will come out shortly, to show that grew even in Q1. And I think Q2, Q3, Q4 is going to be an explosion because we're getting approvals on the largest wirehouses. So absolutely, from the institutional investor perspective, from the corporate perspective, up and to the right. And I even think governments are buying. I think on the margin, governments are starting to leg into Bitcoin on the edges. We've seen Abu Dhabi do that, but I think there are other governments as well that are doing it. So those three forces are just building positions in this asset. I think they will be for a long time.
So interesting. Okay, so these are all real drivers for and positive factors for Bitcoin, but like you've said, that's not so much the case for other cryptocurrencies. So, what do you think the year is going to play out for non-Bitcoin digital assets?
Yeah, I think it really depends on two things. One, it depends on what happens in Washington. It's really important for non-Bitcoin crypto assets that we see both stablecoin legislation and market structure legislation make its way through Congress and be passed into law. I used to think stablecoin legislation was a slam dunk until this weekend when we saw Democrats start to step away from that. So now I think that is at risk. And if that's at risk, then market structure regulation is also at risk. The reason those are important is one of the biggest catalysts of growth for non-Bitcoin crypto assets is going to be traditional financial services moving into the crypto space. And I think if we get those two pieces of legislation, they're going to move in like a tidal wave. And I think it will be enough to lift essentially all major high quality assets upward. But if those two fizzle, and I don't think the market has sort of recognized the full risk that they could fizzle, I think it could be challenging, right? Then we're going to need to see native crypto growth. We're going to need to see Ethereum really continue to get its act together and to execute on its roadmap. Solana to find more institutional uses. DePIN to really continue building. You could still have a good year, but without those two pieces of legislation, I think the narrative will be a little bit, or maybe even significantly challenged, and it could be choppy for those assets. So it's contingent.
Interesting. And what are the main roadblocks that those two pieces of legislation clears?
Yeah, so on the stablecoin front, it should be a slam dunk, right? Stablecoins are a clear killer app for crypto. They're good for the U.S. government because they buy treasuries and they export dollar demand around the world. They're favored by conservatives who are aligned with crypto broadly. They're actually deeply progressive because they lower costs and enable greater access to high quality banking services. So it should be a clean sweep. It should pass the Senate 100-0. But there's a political element here. And I think what we're seeing is the Democrats starting to dig in on the anti-crypto side on the stablecoin bill. And if we can't get the stablecoin bill, the market structure bill is actually complex, right? There's not broad agreement even within the crypto industry on exactly what that should look like. And if we can't get over the first hump of the stablecoin bill, I think market structure will be extremely challenging. So I really think those are important. We've made a huge amount of progress in DC over the last 100 days, but all of it has been on the backs of executive orders, which could be reversed by a future administration. Legislation is harder to reverse. It allows, industries to build for the long term in the space. And I do think the market is going to look toward the passage of those to determine whether we get sort of a rally in non-Bitcoin assets, at least in the near term.
And what does a timeline look like? Like by when should we know? Okay, like game on or not?
Yeah, stablecoin legislation we should know in a few weeks. I think if the real goal is to get that passed before the August recess starts at the start of August, as the name suggests. But it's a very live market like right now. I think we will get there on stablecoins. And if we get there on stablecoins, that's probably enough to help, if there's a broader crypto rally, to see these other assets do well. And we'll see if we get market structure legislation done. So yeah, the next few weeks and certainly by August, we should know.
And for non-Bitcoin crypto, like which assets do you think would outperform or would do well if these bills pass?
Yeah, it's going to be fundamentally driven. I don't think we'll get the same sort of everything rally that we have in past altcoin seasons. So if you look at Ethereum, it's going to need to prove that it can execute on its more aggressive roadmap, right? It's going to need to ship upgrades on a 6-month basis, not just Petra, but everything that comes after that. It needs to continue to follow that and show that it's moving faster than it have over the past few years. I think Solana has its own challenges of showing it can get real sort of institutional adoption in a post-meme coin world. And to the extent that it can show traction there, that would be great. You go down the line to these other layer ones, and they each have their own story. I think they're going to have to execute on those. Broadly speaking, probably the top 5, 6 layer ones are all well positioned if they execute on their roadmaps. But I think it may take good execution. I don't know that a rising tide will lift all the boats in this.
And then let's shift to ETFs for a little bit. Obviously, Bitwise's expertise. So it's been a year and a half or so since the spot Bitcoin ETF approval. Bitwise has one of the top funds with BitB with 3.7 billion in AUM. And yeah, just like taking stock of how flows has been, of how the investor mix has been. What have been kind of the biggest takeaways or surprises in kind of these first few months of having a live Bitcoin ETF?
Yeah, I mean, first of all, overall demand has just exceeded all expectations, right? Collectively, the Bitcoin ETFs are the fastest growing ETFs of all time, which is a remarkable thing. ETFs have been around for 30 years. There's been something like 6,000 or 8,000 launches, and the Bitcoin ETFs are the fastest growing of all time. That really tells you something. In terms of the audience mix, we've been, pleasantly not surprised. We sort of gotten the reaction we expected from institutional investors and family offices and financial advisors, which is extensive buying. What we've been surprised at is by the scale of retail buying. I think ETFs have become the default way for most people who are making new investments into crypto to allocate to the space. And that has exceeded my expectations. That's how the industry got to $37 billion in net flows in its first year and continuing flows this year. So I think it's been a home run. I think it's going to continue. I think these are going to be some of the biggest ETFs in the world. And Bitwise is really pleased to have, in BITB, one of the largest funds.
Get 20% APY on ETH with the High Growth Vault by Kelp in one click. Hougan uses blue chip DeFi strategies with restaked ETH across Aave, Pendle, Usual, and Elixir, managed by strategy pros Ultra Yield and Upshift to deliver highest rewards on ETH, all in just one click. Deposit your ETH, receive Hougan ETH, and stay liquid in DeFi. Trade or use Hougan ETH on platforms like Pendle and Balancer while still stacking rewards. Follow along these steps to get started.
You're one of the largest funds, but there are multiple funds, and it's definitely a really competitive space that has pushed for fee compression. And so how do you look to stand out among so many competitors and like everyone fighting for the lowest fee, or just how do you differentiate with all the other ETFs?
It's a great question. We like to be competitive on fees. We're 20% cheaper than BlackRock and Fidelity, which are the two largest funds. We're at 20 basis points. They're at 25. So fees are definitely one thing. But we really stand out on two other vectors. That's where we're focused. One, we are a crypto native firm. So we've built a Bitcoin ETF for people who love Bitcoin. By that, I mean we donate 10% of the proceeds from the ETF to support Bitcoin open source developers. We publish the addresses of our Bitcoin public wallets so you can verify on chain that we have the Bitcoin that we receive. We're the only ETF issuer that does those two things. And I think for people who deeply care about crypto, that's sort of a signaling mechanism that we care about it too. And you can express that you care about it by choosing our ETF against our competitors. On the other side of the spectrum, for the institutional investor crowd, the TradFi crowd, which we serve, we back up our ETFs with a huge amount of support. So we publish extensive research. We have a full sales team in the field that meets with those advisors. We do 15,000 meetings with financial professionals each year as a firm. And so I think some people out there want to work with a specialist. For sure, most of the people running ETFs are doing a fantastic job. BlackRock does a great job. Fidelity does a great job. And people will choose those firms. But I think, both people who care about Bitcoin and then people who want those specialist support, I think a lot of them are coming to Bitwise. And that's how we try to differentiate ourselves.
Nice. Okay, so Bitcoin really, had a strong debut in the ETFs land. But Ethereum was a bit more muted relative to Bitcoin. Why do you think that has been? And how do you, how do you think that Ethereum ETFs can really get stronger interest?
Yeah, I think there were two factors. One, the Ethereum ETF launched at a time that Ethereum was struggling, right? It was sort of going through its existential crisis of who it's going to be when it grows up. And I think we've just sort of started to bottom out with the changes at the Ethereum Foundation, and maybe we've started to turn the corner. So that was definitely part of that, right? The ETF is just an access vehicle. You weren't seeing people buy ETH on exchanges either. There wasn't a lot of excitement for ETH. There wasn't a lot of excitement in the ETH wrapper. I think the other factor was it came a little bit too soon after Bitcoin for the institutional crowd. If you think about your crypto journey, or if the people in the audience think about their crypto journey, if they came in through Bitcoin, how long from the first time they purchased Bitcoin before they really engaged and understood the differences between Bitcoin and Ethereum, the different markets they were going after? How long before they started broadening out their portfolio from Bitcoin to ETH? I know for me, it wasn't a week, right? It took a while. And the Ethereum ETFs launched about 5 months after the Bitcoin ETFs. I think as they age and more institutions start to dig deeper on crypto, you're going to see them catch increasing flows. So ultimately, I think these are going to be popular products with $10+ billion in assets, but it just takes a little bit of time as part of it. And then you need Ethereum itself to be doing well and executing, which is starting, I think, maybe to do. So I'm optimistic we'll see some growth at the end of the year, but we'll see.
How do you think that ETH staking will play into demand? Like, do you think it will be required that ETH staking is allowed to like that? Like ETF issuers can add staking to their offering for ETH ETFs to pick up or not?
Yeah, we have a natural experiment in this because we've run this playbook in Europe where we had an Ethereum ETF and then we launched an Ethereum staking ETF. And so what we see is that when you launch a staking ETF, basically 100% of the people who have to choose the staking ETF. But what we don't see is like a 10xing of demand. And the reason for that is people who are investing in ETH, particularly TradFi investors, are expecting 30, 50, 100% returns, right? They're not looking for 3% returns. So the staking element is a nice to have, but it's not sufficient to catalyze interest. So I think it'll help on the margin. And I think if we get staking ETFs, they'll attract nearly 100% of the net new assets. But I don't think that alone will cause the market to 10x. I think for that to happen, you really have to see sort of Ethereum get its mojo back. Again, hopefully it's doing.
And maybe a little bit technical, but just interested to hear how you think a fund like this would be structured. Would it be, like, would Bitwise stake ETH itself on Ethereum, or would you instead buy like a liquid staking token and get yield that way?
It's a great question. I can't speak to any particular application that we or others have at the SEC. So I'll just speak generally and some of what we see in Europe. Typically, what you see in Europe is direct staking of ETH, maybe not to 100% of the fund because you have to deal with liquidity and lockups. So it makes it slightly less efficient. I think it would be beautiful to use LSTs to add that liquidity, maybe as a portion above direct staking on the rest of it. I could see that sort of structure, but that requires more regulatory flexibility than we've seen, in Europe, and I suspect that we'll see out of the gate in the U.S. One way to think of how regulators work is they typically crawl, walk, and run. So in that scenario, crawl would be no staking. Walk would be direct staking with some of the portfolio, but not 100%, so you can add liquidity. And then run would be liquid staking tokens as some or all of the underlying. And if I had to guess, that's probably the direction of travel. I could be wrong. This is a different SEC. They're studying this very closely. They're very thoughtful and forward thinking. But having watched the SEC with ETFs over the years, crawl, walk, run is typically what you see.
Yeah, that makes sense.
And so that's what I expect.
Yeah, and that breakup also makes sense. It's like you would stake some of it and also own some liquid staking tokens, and you'd have to just hold a bit of ETH in the fund for to have liquidity. Interesting. We'll see how that plays out. Also, analysts are expecting other crypto assets to be approved for ETFs this year. For you, like how likely do you see this happening, and what are kind of some of the top assets that you're hearing investors are interested in seeing get an ETF?
Yeah, so my expectation actually is that the next major launch from an investor appetite perspective, the thing I think investors actually want, is index-based exposure. I am talking our book because Bitwise created the first crypto index fund in the world. I love index investing. But when I talk to institutional investors, many of them just want an easy button that they can push and own crypto rather than trying to speculate on whether Solana or Sui or Aptos or Avalanche or ETH or whatever is going to be the winner. They just want an easy button. So, if you look out 5 years, I wouldn't be surprised if Bitcoin ETFs were the largest category, index-based ETFs were the next largest category, and then you had a long tail of single asset funds below that. All that said, Bitwise and others are trying to launch single asset funds because there is significant demand. Any asset where there is a vibrant community, high trading volume, and some level of volatility is likely a place that you can grow a market. And look, I think there are a number of assets that I would like to have exposure to, and Bitwise will work to do that. Whether we'll see those this year, remains to be seen. It would be a big step for the SEC to allow crypto assets or ETFs to exist on the long tail of crypto assets. That said, we see it in Europe, right? There are ETPs on a large number of crypto assets in Europe. They work extremely well, and people are using them to gain exposure to these assets. So we will see, but I would keep my eye on the index space. I think that's probably where the most demand is.
For the index space, you need a significant number of single asset ETFs to be approved first, right?
Probably, yes. Yeah. So an index encompasses obviously multiple assets, 5, 10, 20, whatever. And so you need the SEC to be comfortable with that before you would get that. I was just saying from a demand perspective, I think that's what I hear demand for. Just because there are a lot of non-crypto investors who want exposure to crypto. And if you want exposure to crypto, an index fund provides that to you. You don't have to pick and choose. You can just push an easy button the same way they buy the S&P 500 instead of trying to pick between Tesla and Amazon and Netflix and Ford. They just push an easy button. I think you'll see that in crypto if the SEC sees fit to allow an index-based ETP to list.
I always thought that index-based investing makes the most sense. Like you see it in traditional finance. It's really hard to beat the S&P, and most people are just better off buying an S&P ETF or whatever, like a low risk or medium risk index fund, or invest that way, and you get you just get better returns at lower risk. But for some reason in crypto, that concept just it's been really hard for it to take up. Like there's been a number of crypto native index like tokenized index funds providers, and they always like fail to get like relatively big TVL. So yeah, I'm wondering why you think that may be. Is it crypto native investors and traders are just looking for higher risk than index funds? I don't know.
Yeah, you're absolutely right. I mean, your Bitwise launched the first, and ours is the largest, and it's like $1.3 billion, which is tiny or something like that. I think the reason is that crypto native investors are very tribal, right? They love some assets and they hate other assets. Often they just love one asset and they hate everything else. But sometimes they love 3 assets, but they hate a few others. Crypto is such a, to be a real crypto investor, you've had to take on so much personal risk and reputational risk and make such idiosyncratic decisions that the people who go through those funnel have very firm opinions about this versus that, about ETH versus Solana, about SUI versus Aptos, right? They have these opinions. And if you have those opinions, you probably just don't want a blend. The reason I'm optimistic on index and crypto broadly is because crypto is opening up to this new audience of people, right? Who couldn't tell you the difference between those different layer ones, don't know how they're structured, how they work. They just know that crypto is going to be a big deal in the future. And so I think that is the native audience, and the crypto natives are sort of too opinionated to broadly want index exposure, right? They want to pick and choose their favorite asset.
That makes a lot of sense. And so, yeah, with crypto opening up to a broader set of investors, then index funds should probably get more demand. To me, it always made a lot of sense.
Yeah, that is my guess. Although as a somewhat crypto native investor who runs a crypto index, I recognize the challenge. Sometimes there are assets in the index that I don't personally love. And you just have to just accept that. But I feel the same way about the S&P 500, right? I don't love all 500 companies. But what history says is that the S&P 500, as you mentioned, has beaten nearly all active managers over long periods of time. It's just hard to beat an index. So I do think there'll be demand. I think it'll be a big category.
Yeah, absolutely. Is there a way to get an index fund that doesn't include the SEC approving all of the individual assets? Like, could you just like peg it to like an index or something else that, I don't know, is there kind of a workaround to get this ETF?
Yeah, I don't know is the answer. I mean, Bitwise has a filing, so I can't speak to the details of our filing. We hope, we wouldn't file to uplist our index fund if we didn't think there was a pathway toward approval. So I hope there is a pathway. I think there is a pathway, but beyond that, I can't shed that much more light because we're in the quiet period for that.
Got it. Okay.
Goat Network is the first sustainable BTC yield chain powered by decentralized sequencers using multi-coin POS. Goat's mission is to transform BTC and Doge from passive holdings into active, yield-generating assets through a one-of-a-kind economic model that tokenizes sequencer revenues, unlocking the full potential of BTC-Fi and meme-Fi in a way that's never been done before, and creating new yield opportunities for Bitcoin and Dogecoin holders. Supply BTC or Doge, earn BTC in perpetuity. Get started through our user rewards onboarding portal, onepiece.goat.network.
Ethereum is going through this like coming of age moment where it's finding itself, and it's been a really interesting past few months. Now it seems like after a lot of introspection and shifting of priorities, that the scaling of the L1 has become the focus. And it's been a major shift from the layer 2 focused roadmap that Vitalik set out to do. And it's still kind of TBD whether it works out. But for you, as from an investor's standpoint, is this good news for Ethereum that it's scaling the L1? Because you could say, Ethereum has succeeded in bringing in, more mainstream adoption through its layer 2s. So, it is taking a risk to say, no, we want all this activity to come to the layer 1, because it's kind of unproven whether it can sustain all of that activity. So yeah, how does that shift look like for you?
Yeah, it's a great question. So the most bullish thing about Ethereum right now is that it's recognized that it's had an issue. So before we get into how it's solving that issue, the old saying is when you realize you're in a hole, stop digging. I think what Ethereum has done is realized it was in a hole and stopped digging. That alone is bullish, right? That alone is good news. It's better than just continuing down this pathway and talking about roadmaps that materialize in 5 years. Like, that was a path to irrelevance. So yay for that. In terms of this question of scaling the L1, and is that the real priority? I think Ethereum needs to do two things to be extraordinarily successful. It needs to ensure that the L1 is important enough that the layer 2s can't effectively decamp from it in the future, right? It needs to have a sustained center of gravity. I think that's hard to imagine without significantly scaling the L1, right? It was becoming too fragile against the strength of the L2s. They needed to shift that economic balance. So to that, I think it's a good step. But the real thing for ETH is it has to 1,000x the number of users, right? Like, that's the game that we're actually playing. You need two things to happen. You need to 1,000x the users, and you need to make the L1 have a strong economic tether. The question is, are we going to get both? And you could say that scaling the L1 should help with the 1,000xing the users, because it should improve the user experience. But I think that's really what I'm focused on. Like, it's actually less important to me that the revenue is down and the L2s have taken some of the revenue. I don't really care. You could add all the market cap of the L2s into the L1 and ETH would still be down a huge amount, right? It's not like that has really been the problem. The problem is we haven't 1,000x the users. So I want to see the L2 scale. I want to see the L1 scale. I want to see user experience improve. If we get both of those, then it's a multi-trillion-dollar network. If we only get one, like if we go back to where we were before the L2 roadmap, but we don't have more users, it's a failure. So I think we really need to keep an eye on both of those things.
That's a great point. What do you think is the thing that can get 1,000x users on Ethereum?
Yeah, I hate to go back to what we talked about. One piece of it is stablecoin legislation and market structure legislation, because I do think that's where a huge amount of the future growth comes from, whether that's stablecoin growth, the DeFi growth that follows on from an increase in the stablecoin market, the DePIN and sort of institutional DeFi market that could come along when we have market structure legislation. So I think that is like a conditioning factor. And then the UX needs to get better. I mean, the UX with the fractured L2 landscape was painful. As a user, it was better than paying variable fees that ran up to $100 a transaction, but it still wasn't perfect. So I think we need better user experience and market structure regulation. And if we get those two things, I think it has a shot. Not a guarantee, because there are lots of competitors, but it definitely has a shot. But I think we need both of those things.
So with stablecoin legislation and market structure and improved UX, the applications that might take off from there presumably are DeFi related, right? Would it be just financial applications on Ethereum that you see can bring in those users?
Yeah, so that's the easiest thing to see, for sure. And I do think we're gearing up for like a new, I don't know if it'll happen in the summer, but a new DeFi summer. I think that will happen. But you'll see other things as well, right? You have to remember, like the thing I try to keep in mind is that as challenging as the past few years for ETH has been, the costs have come down substantially to use the network, and the throughput has increased dramatically. And that means you can do these other types of applications, right? Like you can see DePIN really scale, you can see agentic AI scale, you can see everything we've talked about in the past, whether it's micropayments related things or you choose your area that's sort of petered in the past, social networking, etc. All those things are now possible in a world of improved regulatory clarity and massively scaled throughput. Those are now possible. So I think DeFi is the easiest thing to see. DePIN is maybe the second easiest thing to see, but all the previous sort of experiments that failed because the network was too expensive or too slow or didn't have the throughput are now possible again. And so I think it's possible we see those experiments grow as well.
Yeah. Okay, but you mentioned it's not guaranteed because there's a lot more competition now than there was before, even during DeFi summer. So I guess like the main competitor Ethereum has right now is Solana. Would love your thoughts on Solana. It was definitely kind of the king during the meme coin craze. That's kind of fizzled out. What would Solana need to solidify its spot as, you know, like the place where developers go and where kind of dApps thrive, kind of beating Ethereum?
Yeah, I mean, I think it has a seat at the table, and that's not going away. It's incredible community, incredible leadership, and easy to use tech. So it needs to find scalable applications outside of the meme coin space, right? It's pushing very hard into the RWA space, certainly into the DePIN space. So it's competing in these same areas, but I wouldn't bet against it. My view of all these is to go back to my index point. I'm like a broken record. I would just own them all. I have very high confidence that programmable L1 blockchains are going to be really valuable, but it's really hard to pick. You know, it's hard for me to say ETH, Solana, and on down the chain. They each have their unique shots on goal. They're each targeting slightly different markets, but they overlap a great deal.
Do you think it'll be one?
No, I don't think it'll be one. You know, I think the communities and the underlying software is different enough that I think there'll be multiple. I don't think there'll be an infinite number, but I think what we're seeing today, where there are robust communities in a variety of places, I think that's probably the most likely outcome. I'm not certain, but one blockchain to rule them all is asking an awful lot.
Yeah. Okay, so it seems like there's this maybe like structure to digital assets where Bitcoin has become the clear digital gold safe haven. You know, it's become it's one at having that use case, the digital gold use case. And next will be the blockchains that are a computing platform for decentralized applications. And for those, then there's multiple blockchains that can succeed at getting a share of this market that will be huge. You know, if we believe that the entire kind of Web 2 is going to become decentralized and become Web 3, you know, then there's definitely room for more than one of these blockchains to succeed. But do you agree that it's Bitcoin and as digital gold and all these other cryptos as kind of dApps platforms, or because there's a camp on kind of the Ethereum space that says ETH is money, ETH is ultrasound money, it can be better digital gold than Bitcoin. Do you think, I mean, would Ethereum have a shot at competing with Bitcoin for this spot in an investor's portfolio?
Yeah, I don't think so. I think ETH can have money-like characteristics and can have a monetary premium in certain areas, but I don't think it's going to. I think Bitcoin has escape velocity as digital gold and as a globally recognized sort of reserve asset. I think it's going to be very hard for ETH to catch up. But if you look back at ETH's history, some of its best performing periods were when it was used effectively as a form of money, right? We denominated NFTs in ETH. We raised money in ETH for ICOs. And you saw ETH attract a monetary premium that contributed to its strong performance during those booms. It can be money locally within ETH communities. It can have money-like characteristics, but I think Bitcoin has escape velocity. I'm not sure that ETH is really challenging for that. It would be a long road to that. Maybe money-like characteristics. If you think about gold, there's gold, and then there are other assets with money-like characteristics, whether that's real estate or oil or other sort of more utile assets. And I think that's probably the most likely scenario. I could be surprised, but when you have governments stockpiling Bitcoin and the US government separating the Bitcoin strategic reserve from the digital asset stockpile, I think you're starting to get barriers to entry that are going to be extraordinarily hard to overcome.
Yeah, that's a fair point. Okay, and then wrapping up, we talked about how this year was, very, it was, very unexpected and a lot more volatile than most of us had predicted. How do you think the rest of the year will play out for crypto? Is it going to be a bullish in the second half?
Yes, it's going to be a bullish second. At the end of the day, the long-term bullish forces driving crypto forward are just too positive to keep down. You have massive amounts of institutional capital that needs exposure to the space. You have, even if we don't get those two pieces of legislation, massively improved regulatory situation with a much more favorable SEC, FDIC, OCC, and other parts of the administration. You have massively improved technology on these programmable blockchains versus where we were even 2 or 4 years ago. I don't think things keep that down long term. So I'm very bullish for the end of the year, particularly for Bitcoin. I think it's got a really hard to attack thesis that it's up and to the right for Bitcoin, but even for the rest of crypto. Could it be choppy this summer? Summer's historically a choppy period for crypto. Those patterns have a way of sticking around. I think it could be choppy, but I think the long-term tailwinds are too strong to deny. I think this is going to be a good year, and I think next year is going to be an even better year. So I'm bullish. I'm bullish long-term.
Awesome. Thanks, Matt, so much for this conversation. Super interesting stuff. To me, the biggest kind of takeaway is how Bitcoin has now earned a potential spot at becoming a global, sovereign reserve. I think that's definitely, maybe not for next month, but for the long term, a huge positive catalyst for Bitcoin. So we'll see how that plays out. But yeah, it's been a crazy past couple of months. So yeah, thanks for going over all of these themes with me.
Thanks so much. This was a lot of fun.
Awesome.